Hey everyone, good morning. Hey Mark, first as usual. Right, Yamilu, nice to see you. Joanna Francois, nice to see you. Abdul, nice to see you too. How are you guys? Hey Bob Moemer, nice to see you, man. Nice to see you. Thanks for tuning in. Bob, Diana, nice to see you. Oana, right, I see Jasper, nice here. Nice to see you here too. Diane, Rohan, Ellen Kanemba, Desri, for once you're on time. Kidding. Right. I'm good. I'm good. Thanks for asking, Kanemba. Osama, nice to see you. I think I replied you on the VIP room already, so go check that out. Right. Gustavo, right? Asohaka? No, Ashoka. That's right. Ajay. Thanks for checking in, guys. I'm doing fine. I'm doing fine. Not a dad yet, so uh this week supposedly, yeah, my wife's due date is on Friday. On Friday, Friday is a supposed full term, so they would be inducing her on Friday if the kid has not came then, right? So it's gonna be pretty soon. Thank you, Emmanuel. Right, hey Leandro, nice to see you too. Right, we got Kyokusima. Nice to see you. Nice to see you. Right, Kyokusima. That's an interesting name. Is it from Japan? Right. Kelvin, nice to see you too, man. Nice to see you. Right. Lars, yeah, thanks. Yeah, it's gonna be exciting. Um, thanks for your well wishes, guys. Right. Today is gonna be so next week will be Cassandra who's gonna take the Tuesday and Wednesday sessions. Right. I know it's a holiday on Tuesday, but should be doing both sessions on Tuesday and Wednesday because yeah, there's a 99.999% chance my wife would kill me if I if I tell her that, hey, can you like hold the baby while I while I jump on a webinar or something. So we cannot toy with death, right? So I would not toy with fate, right? I would choose to take a rest, right? And Cassandra can take care of you guys next week, right? Peter, nice to see you too, right? Yeah, nice to see you too. Today's session, yeah, it's a wise move, right? And that's how you live longer, right? You avoid making the bad decisions in life, right? Anyway, today, guys, we're gonna touch on trend line and channels. As much as you guys don't, I have my criticisms on it, but I actually use it a lot, trend lines and channels. But it's more as a form of a confirmation, no, a pre-confirmation of a move, right? So I usually need to, I won't trade with trend lines and channels alone. I would use trend lines and channels to confirm a move on a horizontal level, especially when you're playing breakouts, right? I use it particularly for playing breakouts, particularly for praying, playing um, continuations. Okay, I'll be showing you what I mean by that. I collated 1, 2, 3, 4, 5, 6, 7, about 7 different examples on some of the live moves I called in the past few weeks actually, right? I think all the way until just in the past 1 month only, right? I got a couple of very, very nice moves. I'm going to show you guys how I called it, right? And but before that, we touch a little bit on trend lines and channels to give you just the basics, enough to understand how it works. Then I really want to focus on today's session to focus more on how you can apply it to trading, right? Not the theoretical part, not that much of the theoretical part, but more of the practical part on using it to trade. All right, guys. But okay, let's. If anyone is here for the first time, please let me know, right? Just give a shout out in the chat, right? Just so that I know who's here for the first time. If I explain any of the advanced terms, I know where I can send you guys to refer to learn. But more than that, let's begin today's session. Gil, nice to see you. First time, welcome, welcome. We got William here for the first time too. We got Heinrich. Heinrich here for the first time. Heinrich Horn. Where are you guys from? Sounds like Germany. Is Heinrich from Germany? Right? Gil, I can't make it out. Which country are you from? Kamran, right? I'm guessing Dubai, maybe. Oh, Heinrich from South Africa. Gil from Philippines. Okay, awesome. Kamran from UK. Okay, I'm really bad at guessing countries. Welcome, guys. Thanks for joining me in today's session. Right. So if you guys are here for the first time, every Tuesday, IC Markets, we have a live we have an educational session like today, and every Wednesday we have live market analysis where we take on the markets together. We look at some of the juicy stuff, right? Calling some of the big moves, very fun. All right, but now without further ado, let's begin today's session. Disclaimer as usual. Remember, guys, everything in this webinar is educational in nature, so please do your own little due diligence before you guys trade. Nothing in this webinar should be construed as investment or trading advice. All right. Moving on, the key agendas that we're going to touch on today, right? The majority, I'll be touching really quickly on trend lines. Oh man, why is it black? I'll be touching really quickly. How do I, no, normal non-drawing mode. Yeah, I'll be touching really quickly on trend lines. Then I'll be going into parallel trend lines, essentially a little bit of channels, a little bit of like an area, a buffer area, right? Then looking at channels, right? Then I'm going to spend the majority of the time crafting it into a strategy because we have went through 1/3, right, which is support and resistance, no swing high, swing lows, 2/3, which is pullbacks and overlaps, and then 3/3, which is trend lines and channels. So this by itself will give you enough ammunition to actually start trading. And it's slightly different from my usual style of trading of the Nike tick kind of reversals. This is a new strategy which I'm going to teach you guys. Very high hit rate too, right? It requires a little bit more patience because it works better on the H4 4-hour chart. Not so good on the 15-minute, 30-minute, or even a 1-hour chart. It's much better on the 4-hour chart, right? So I'll be showing you guys how you can put it into action, right? Simon, nice to see you tune in, right? And Ilmas, nice to see you tune in too, right? Yeah, nice to see you tune in too. All right, let's begin today's session, right? For those of you guys who are here for the first time, introducing your host for today, right? My name is Desmond Leong, right? So I run the award-winning research firm Everest Fortune Group and also the Forex Army. We're finalists for 2019, 2020, and 2021 for Best FX Research and Best Equity Research, right? So usually work with the major institutions on telling them where the markets are heading, right? But we have a special partnership with IC Markets where we are bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level, all right? So yeah, if you want to follow me on Instagram, you can find me on Comfy Desmond. I might be creating my own little Instagram handle where I'm gonna post a little bit more of my trades. If you're here for the first time, I just created it, but I have not exactly created any content there. But you want to be the first followers, you can check it out. It's called Shook Trader. It's gonna be a pretty funny Instagram handle. Yeah, SHOOK, Shook Trader, right? So whether we make money or not, we'll see whether you're shook or not. It's gonna be pretty fun, right? You can go follow that account, right? I'm gonna post some stupid stuff there on trading, right? So because Comfy Desmond is more of my personal account, right? So some of you guys are actually asking me why don't I post more stuff on these accounts, because there's a lot of it's more personal, right? So I created an account, right, just for me to post my stupid trades, right? And you can go check it out there, right? Otherwise, if you want to find me on the website, is the Forex Army, all right? Dr. Prasad, nice to see you. Pedro, nice to see you too. And Nick Morgi, oh, first follower, awesome stuff. Yeah, no, actually in that account I can post more of my cats and stuff, right? I get to be a little bit my wife won't like keep questioning me whenever I post crazy stuff, right? So maybe I can even take videos of my cat helping me trade. Oh, awesome. Thank you, Nick. Right, so let's begin today's session. Let's begin today's session. I'm just going to touch on a couple of things for new people here, right? First things first, right? Go to YouTube, IC Markets, right? This is nope. YouTube IC Markets over here, okay? And tomorrow's live analysis session, I'm going to copy the link address. Chidi, I think everyone should be able to hear you. No, everyone should be. Sound works fine. I think sound works fine, right? Sorry, I just forgot what I was going to share with you guys. Leon, I don't think there's a chat function. I don't think. So guys, if I send you a link right now, if I send you a YouTube link in the chat, are you guys actually able to see it? Hey, Julia, nice to see you. Thanks for tuning in. Oh, you guys are able to see it, but can you send messages there? Hmm. All right, you can't send messages there, right? Yeah, you can't send messages there. Yeah. But it's cool, right? So for GoToWebinar, right, you guys are able to see, you guys are only able to see what I send, but I can see all you guys sending all your messages, right? So don't worry, I literally have another screen open here just to monitor your questions. However, in tomorrow's session, the link that I just sent, right, is our live market analysis session where you can tune in and we look at the markets together, right? Cassandra is I think she'll be coming back tomorrow, right? Like she has so-called recovered from COVID, but she still has it still shows positive, a very faint positive. So I think tomorrow should be fine, and she'll be coming back tomorrow. So you'll be able to see her, Cassandra Bob, right? Okay. Now, Syed, yes, I'm able to see that message that you just sent. Okay. Now, so for those of you guys who are here for the first time, playlist. This playlist over here is what you want to go. This playlist over here is the place you want to go to, right? It shows you everything you need to learn in trading. Watch it all the way from the bottom, all the way from the bottom, all the way to the top. You learn everything you need to do to be a better trader, right? So like me, I'm a young dude. I'm a pretty young dude, 32 years old, right? And I hope that that can be an encouragement to some of you guys that you don't need 30 years in trading. You just need 30 days learning the right stuff. All right, many of you guys have became better traders, right? Very profitable traders. People even pass their trading competition. So congratulations on that, right? I want to see you guys trade better over time. Okay, so these are the few main places that you want to go to, right? The IC Markets VIP room. If you're here for the first time, I'm gonna send a link to you. As long as you have an IC Markets account, with $1,000 account, right, with IC Markets, you get access to here. Of course, there's $1,000, there's $10,000, and there's $100,000. Each one gets you a different access. All right. Now, one of the good things about the VIP room is that you get to practice your analysis with me. Not only with me, with the other analysts. Cassandra does the best to try to answer as many questions as possible. Vico too, right? And we have a couple of new analysts coming in who will help do their best to help you too. Now, when you're in here, you need to click on this thing called Request Access if it's your first time, and you just need to upload proof of your IC Markets account, and I will activate it for you. Otherwise, if you're looking at stuff like you're just looking at dollar yen, for example, right? Let's just say you're looking at dollar yen, and like, okay, that's a nice breakout. So for dollar yen, if you want to practice your Fibonacci, right, and or anything for the matter, trend lines, you might draw this over here, and you might be asking, hey, hey Desmond, right, is this the 23% Fibonacci retracement that needs to be broken, right? So you can just highlight whatever text you just wrote, click this button called link object to text, and you can select anything on the chart. For example, I select this 23.6%. You can see it appears over here. You click confirm and you send it through. So what happens when someone sees the message and they hover their mouse over it is that they can see the 23% light up over there. So this allows me to get a better idea of exactly what you are what object you're referring to in your analysis. Anyway, for those of you guys who are looking on this, right, it has something to do with our trend line analysis later. But just so that you know, right, what I'll be looking at for here, right, for dollar yen is there's a potential trend line breakout over here, right? But there's this level that needs to be broken, which lines up with the 23% retracement over here, right? And it is some sort of a double top pattern. Okay, if I were to type this into the VIP room, I would say trend line breakout with a potential double top pattern. Price needs to break the 23% retracement along with this swing low support, right? If you're like me and I like to link everything, trend line breakout, this is the one. And actually, the trend line breakout was over here. Trend line breakout with a potential double top pattern. Which one am I referring to? This one, right? Price needs to break the 23% along the swing low support. 23% along the swing low support. Confirm, and I send it through. So what someone sees when they click on this analysis, right, is they can see, all right, there's a trend line breakout over here, right? There's a potential double top. You can see it light up, right? 23% retracement with a potential swing low support, right? So it allows you to kind of get a better understanding of what I'm trying to explain to you guys. All right. Julio, if you're in dollar yen already, slightly tricky. You know, you need. I do believe you need to wait for 23% to be broken first to trigger the move down. All right. Could that be a yeah, you do need to wait for 23% to trigger the move down. I'll be teaching you guys pretty soon how you can use these trendline breakouts, channels, and horizontal breakout levels. Everything I taught you in the past 3 webinars to forecast some of these better moves. All right. Now let us rock and roll, guys. Let us rock and roll. Where am I? My brain just stopped for a while. Okay, here we are. All right. Okay, now let's move on. So trend lines. The first thing I want to ask you guys: wick or no wick? Who uses wicks in trend lines and who doesn't use the wick in trend lines? So that we are all on the same page over here, right? I can see a couple of you guys answering. All right. The majority of you guys are saying wick, right? We got UMass to say it doesn't use the wick. Data Prasad say sometimes, right? We got Ajay say nope, right? Little bit of overlap is fine. No wick by Ansu, right? Bit of both by Simon, all right? All right. Not sure by Leon. I love the answer. You're not sure. Yeah, it's just be yeah. You can just let me know you're not sure. Okay, depends on the size of the wick. All right, so let's just look at this, right? What I actually want us to focus on for here is that let's look at how can we agree? Does this trend line look nice? Does this trend line look nice? Who says yes? Who says no? Okay, Mark the rebel. Well, the majority of you guys at least are saying yes. Rasek, you must, Michelle. 90% nice. Don't like last week crossing a bit. Yeah, 90% yes. Could be tighter. Okay. And let's just say, you know, if this is on the higher time frame, if I'm not wrong, this is on the H4 chart, right? If this is on the H4 chart, I move down to the H1 chart over here. Can you see? Right. Besides over here, which was the point over here and the point over here, can we agree that it did catch a nice bounce, and we did catch a nice bounce over here, and just slightly a nice, something kind of nice over there, right? So it should be more or less the same if you take the week, right? Especially 0.1 and 0.2 over here, right? Same thing, 0.1 and 0.2, you should be able to catch it pretty nicely, all right? Now this is higher time frame H4 going to a lower time frame H1. Now the Omar, it is a valid trading strategy. You just need to use it correctly. Okay, I'll be teaching you guys how to use it, right? And it's true, Carlos. So I'm going to show you how you can actually use trend line. It's actually it is good as a gauge and as a confirmation to improve the probability of your setups, but it is bad to use it to as an entry point. Okay, well, my mouse just flew away. All right, so now in this example, trend lines week on the week, how many of us says this is nice? We got a couple of points over here. We're not taking, now this is no wick. All right, we got 4 points over here, we got no points, right? Does this look nice to you guys? We are not taking the wicks for trading. All right, Ansu is this time is saying yes. Rugesh is saying yes. Sort of by UMass. Joanna looks okay by Mark. All right, not that nice by Randazzi, just but looks okay on this time frame. On this time frame, that's the indicative word, right? On this time frame. Yes, Nick says gross. because one of my best students, right? You went through every single one of my webinars. It is okay by Diana, right? But now let me show you. So this is on the H4 time frame, all right? Like previously. Let's go one level down. H1 time frame. What do you think about these movements here? Would you consider this as a nice trend line? And Mark, Mark is saying, yeah, it looks freaking terrible, right? Looks terrible. But yeah, so many you consider false breakouts or no break. Just looking at it here, at first glance, no one would draw a trend line this way. You're gonna look at this and you're gonna say, man, this is terrible, right? It looks terrible, and that's the truth. But if you think about it, it is the same chart. It is the H4 chart and the H1 chart. You're not looking at two different. You're not looking at two different charts over here. You're looking at the same chart. So how can one look good and one look terrible, right? And that is because it all goes down to whether you use the wick or you don't use the wick, right? If you use the wick, like in this example, universally, right, whether you're the H4, H1, M1, M5, M15, week one day, this low point will be the same as this low point, because that's what a wick captures. The wick captures the lowest point, all right? So that's the difference, right? And use the wick over here, it will be universally the same. It will universally be the same whatever time frame you are on, right? If you don't use the wick, right, which is what a lot of people try to do when drawing trend lines, that's where things get way too subjective, right? Because if you don't use the wick, only the people who are looking at this time frame might marginally agree with you, right? They might be saying, yeah, you out there who look at the H4 time frame, I get it, you don't use it, you don't use the wick, and I agree with you. But those people who are using the 1 hour time frame, 15-minute time frame, 30-minute time frame, 1 day time frame, anyone else who use any of the different time frames, they would be disagreeing with you, because they're going to draw their own analysis, and the wick doesn't, and if they don't use the wick, it's going to look very, very different, right? So important thing to consider here, right? When you're drawing trend lines, to reduce the amount of subjectivity, you do try to use the wick. Okay, do try your best to use the wick. Then that helps you automatically, just by applying that rule. You immediately set yourself up for getting better setups. Okay, because you reduce the amount of subjectivity. You reduce, oh god, you reduce the amount of subjectivity, right? Subjectivity, a freaking tongue twister there, right? Subjectivity, right? Hence it improves the probability of your setups. Okay, now let's move on to the next thing over here, right? Julia's asking to draw in the line in the wick. It must be from highest time frame. Not necessary. Any time frame is fine as long as you use the wicks. But the higher time frame allows you to see more stuff. So maybe in the higher time frame you can see all this. The lower time frame you might have only been able to see this over here. But it is always good to zoom out a time frame further and just to see what the bigger if you are, for example, in this example, you might have drawn a trend line like this, okay? Not knowing if you're on the smaller time frame, right? But if you go on the bigger time frame, you start to realize, hey, there's a much bigger move over here. Okay, so what I like to do is to just kind of go further back just to get a gauge on the time frames, okay? That is exactly correct, Nick. Now, the next thing I want to ask you guys is this trend line. Is it good? Yay or nay? What do you guys think? Yay or nay? Okay, I can see Marugesh saying yes. Yeah, by Diana, kind of will say yes, it is good. Man, Jasper can be my second in command already. Right? Okay, we got a couple of guys say yay, nay, right? Peter, that's right. Kamran, good enough to see if it's a setup. Okay, all right. Like some of the answers that are coming through. Well, quite a number of you guys were actually saying yes, actually, right? It's not so much of the second touch. Let's assume all the touches are correct. But the important thing to take note of, right? The important thing to take note of is that for a downtrend, when prices are going lower, lower and lower and lower and lower, okay, when it's going lower, the trend line needs to be from the top. It cannot be from the bottom. Okay, the trend line cannot be from the bottom. How do you find support, when price is going lower, right? You can't use this in trading, right? You could use a channel, right? It could look something like a channel, but even when you're trading channels, right? Even when you're trading channels, right? It's easier to play the reversal from here, right? The reversal from here, then the bounce from the bottom of the channel. Because imagine it's like a slippery slope, right? It's like a slippery slope, right? And price is going down. It's very hard to catch the bounce, right? But in this case, right, you can see that there's a bearish, there's bearish momentum, right? There's bearish momentum. So it's easier to play the reversals because you're playing it in line with the trend. The trend is bearish, you're playing the drop, the reversal, then you naturally have the momentum of the trend assisting you in this setup, right? But if you're trying to play the bounce on support, on the descending support, it's a lot difficult because you have naturally a bearish kind of bearish momentum all weighing down on you. So imagine you're sliding down a slope, how hard is it to try to jump, right? Because it's so slippery, right? So you must imagine it that way. Even if you have a channel, right? Or even if you have a channel, it's very hard to play the bounce from the if you have a descending channel, it's very hard to play the bounce on the support. It's easier to play the reversals from the top, right? And that's also the reason why if you don't even have a channel, we don't use a trend line that draws from the bottom. Okay, I hope that gives you guys a better understanding of trend lines. It is the same thing when you have a ascending channel, right? When you have a ascending trend line, you cannot play the reversals from the top. It's very hard. It's easier to play the reverse, the bounces from the bottom. Play the bounce here, the bounce over here, the bounce over here. You never play the reversals from the top of an ascending line, right? Michelle, it's the first time you're hearing this, right? And that is why, that's why we try to bring you the good stuff here at IC Markets, right? I'm not showing you the super basic stuff that you find on Baby Pips or Forex Factory. There's stuff here to learn, it helps you. Everything you learn here, right? It adds in its own small way or big way into the small little probabilities so you becoming a better trader. So sometimes you might be on the, you might be on the 40% mark, right? You just need another 10% to bring you to break even, another 10% to bring you to profitability, right? All those small little things, all those small little mistakes, we to be profitable, you need to avoid those making those small little mistakes. So when you see, so this, for example, when you see a channel, right? Not all channels are equal. When in a descending channel, play the reversals from the top, right? Play the reversals from the top. Play the breakouts when they happen below. Okay, this is something usually it might be slightly better. Okay, play the breakouts if possible below, right? And for ascending channel, play the bounces, right? Because you have upward momentum kind of pushing it up for you, right? So if you with that bullish momentum, it's much easier to play the bounce instead of playing the reversal of the tops over here. Okay, guys. Now, I hope you learned quite a bit regarding trend lines over here, right? So remember, trend lines, uptrend, from the bottom, right? And then of course downtrend, you from the top. Play the reversals from the top because you naturally have the momentum of the market working in your favor. Okay, this actually, this is not Coke. Some of you guys asking, right? It's not sure how many of you guys have it, right? It's called 家家两杯. I don't think many of you guys will even have it. It's a herbal drink, right? Herbal drink because it's I've been talking too much these days, right? My throat is starting to lose my voice. Yeah. Yeah, Desiree, I think you might be the only one here who knows what it is. Right? I have no idea if anyone else knows what funky drink is this, but it's great. It's a great drink. All right. Now, let's move on from here, right? So you can see, you know, one reversal. You minimally try to look for 3 points. I am fine with 2 points, but 3 is something to confirm it, right? 3 is the something to confirm it. So if you have a trend line, you know you got 3 points. You naturally look for the reversal from the 4th point. So you can see, you know, got the first one, you got the second one, you got the third one, 4th one, you play the reversal. This is oversimplifying it, all right? This is oversimplifying it. It's not as simple as just playing a reversal from the 4th move over here, right? There's a lot more that goes into it, right? Support and resistance, you know, everything that kind of calls the move down. And I'll be showing you how I actually use it in a real trading strategy later, okay? In a real trading strategy later. One thing I do want to let you know though, all right, I need to ask you guys, for a channel, if we're drawing a channel, right? If we're drawing a channel, how many touches do we need at the bottom? How many touches do we need at the top? Anyone want to take a guess? For it to be considered a channel. Okay, I see most of you guys answering. All right. Okay, to this two, it's the top. All right. Okay, most of you guys are answering correctly. All right. Now, can see some of you guys say 3, 2 or 3. The trick is 2 at the bottom, 2 at the top. The answer should not be 4 because we can't have a case of 1, 2, 3, and then 4th, right? For a channel to work, you need at least 2 at the bottom and 2 at the top, okay, for it to work. So that's a rule over here. You need minimally 4 touches, 2 at the top and 2 at the bottom, minimally, for it to be considered a channel, okay? 3 at the bottom, 1 at the top does not constitute a channel either, okay? Some important points to take note of. Now let us jump. Not jump, sorry. let us look at some calls I made previously, right? And then how it kind of worked out. Okay. So this was a call I made on April 20th. All right. So in this example, right? So these are some video recordings I sent out, right, in the past 1 month. I'm not going to dig too far back. I'm going to show you what happened in the past 1 month, right? So in this, I probably need a pen over here, right? So you can see, is this the only way I can draw it? Yeah, I think this is the only way I can draw it, right? So we can see that this was a potential channel breakout, the trend line breakout. You know, got reversal here, got reversal, small little reversal, look like breakout, but it's not enough to play such a breakout, right? You need to line it up, in this case, with a nice little overlap resistance that I told you guys. So it had 2 breakouts. One is the trend line breakout, one is the overlap breakout, right? And that gives us the confidence to call the move up this way, right? So we have our buy entry here to make a push up to our take profit over here. Okay, how that looks like, right? How that looks like, I will need to again remove all my drawings, right? It's over here. So we are on euro dollar, right? On euro dollar. Go and do a little bit of a back. So this was the move we called, right? Same thing. You can see the breakout over here. We are calling for price to pull back and to shoot up there. So same thing over here, right? You can see how price broke out, made a pullback, and then we are calling it to go all the way up. Okay, so this is one way to use trend lines, right? So by itself, breaking this overlap is not enough, but breaking this trend line gives us a double confirmation, right? First confirmation, second confirmation for price to go up, right? How did it work out after that? You can see price very nicely shot all the way up, hit our take profit, then reverse, right? Trade management is a whole other thing, right? Knowing where to place your trades. Like in this example, notice that I didn't put my take profit very, very far away. I just played to the 38% to the next big level, because in trading, you know, you can only cut, the closer your take profit, the closer it is to your locus of control. The more control over you have over it, the higher the probability of you getting it correct, right? But it all boils down to locus of control. So I like to play from one resistance to one support to one resistance. Okay, you can see how I caught the move up to here. The very next thing I did, the very next thing I did, right? You can see the very next day on 21st of April, right? So this recording was on 21st of April. Once it hit my target, I called for the reversal back down, right? So you can see, there we go, right? Price was just about over here, right? Once it hit the target, I was saying that price would reverse back down, and then there you go. There you go, price actually reversed very nicely to hit our take profit. Okay, so this is an example of using trend lines, but I do have some pretty good examples with channels too. I'll be showing you in a bit. Let me see some of the questions here. How I decided to take profit over here. So my take profit was decided because I did a Fibonacci retracement here, and I used the 38% retracement, right? My 38% retracement lined up very nicely with this swing high resistance, right? So I wouldn't even play to this level. So some people were tempted to play to this pullback resistance, right, about over here. But if you played it to this level, you would not have hit your take profit, right? You have missed it by a bit. So you must always fine tune your trading. In this case, 38% was right about there, right? So you can see, I'm not sure if you can see, but you can see my take profit. I had this 38% over here, and that is the reason why I played up to there, and that is the reason why you can see price actually bounce quite nicely, react off the 38% and reverse. All right. Okay. Okay. The reversal is because it was testing the 38%. It was testing this swing high resistance, and it was testing the overlap resistance over here, right? And after all, there is bearish momentum that kind of pushes prices down, right? But that is not so. That does not use trend line, so I will not explain to you how I call the reversal on that. Okay. What I want to show you next is actually this US oil. So US oil, right? This was called on a buy order on the 13th of April, right? So you can see. Let me explain to you guys, right? It's very important that I explain to you guys. Pen over here, right? One touch, two touch, three touch. Okay. First touch, second touch, third touch. You can actually consider this as almost a four touch over here. Okay. Price has broke out of this level, and you look at this thing over here. Remember what I taught you in the previous session. This is the overlap resistance. React one time, bounce one time, bounce one time, react one time, react one time. So price broke out of here, right? You have one major level and got two major reasons why price should be making a nice little push up to this level. Okay, you should have a nice little Rasek. If you want me to do an example of what's going to happen, tune into tomorrow's session. Okay, today's session, I might be able to look at some charts in real time later, right? But I must focus on teaching you guys on how it can be applied. Okay, if I show you what is going to happen, right, we won't know until next week whether it happens or not, right? But at least in today's session, I can show you how you can retrospectively apply it. Okay. Now, yeah, so tune in for tomorrow's session, right? So this is all, right? What I want to focus on is the breakout over here. Notice that there's a trend line from the top. Trend line breakout is the first confirmation, followed by overlap breakout. Okay. So how it looks like. How it then looks like is, in this case, I think it's, was it oil over here? Nope, it's, where was it actually? Could be, oh no, I'm looking at gold, wrong one, sorry. I'm supposed to be looking at oil over here. There you go, oil. Right, so you can see the move over here, right? Same thing, calling for the move up to here, which worked out very nicely, right? You can see the move up that we are calling was a move up over here. Now, a few important things to take note of, right? Why did I play this as a take profit level? Same thing, I would do a Fibonacci retracement from the top to the bottom. You notice that the 50% retracement lines up directly over there. Okay, so I wouldn't be so ambitious to play the move beyond the 50% retracement, especially at the swing high. I mean, I had no idea that it will go up to here, but to me, you don't always need to catch the move right at the top, right? You don't even need to take the move right from the top, right? In this case, I can see Sandeep, why do you take it from the second peak again, right? Why did I do a Fibonacci retracement from here? Because when you're drawing Fibonacci retracement, remember, you're looking at market structure, okay? There's a big move down, there's a big move up, there's a big move down. So when you take a Fibonacci retracement, it's nice to take it from the top all the way to the bottom. This is a single move that you're looking at. Now, a hint, right, is that when you're drawing Fibonacci, right, I'm going to zoom in here. Can you guys see that there is this dotted line that goes all the way through? Okay, the trick here is that price movement needs to be as close to this Fibonacci retracement as possible, right? In this case, we can see that, you know, price does follow this Fibonacci retracement pretty closely. Okay, let's read that. That's right, right. I should use that more in future examples, right? So you look at this example, it's very clear. Now, if you took the Fibonacci retracement from here instead, all the way down to here, now look at this, right? You're seeing that price, this is the trend line that is following price. The problem is that price went all the way down here and up here. There's this massive gap that happens over here. That is why it is not considered a good level, because the Fibonacci trend line is not following price very nicely. You can take a movement from here down to here, here down up to here, here down to here, but you cannot take it across this way because of this movement over here. Okay, yeah, you don't need to take it from the first peak. Try to capture the move as nicely as possible. I hope you guys got that right. Yeah, I got the wrong one earlier, Joanna. Thanks thanks for letting me know. We got Chi Kong asking us whether I'll put a buy stop at or after breakout. So there'll be two kinds of entry I'll be looking at, right? So in this example, right over here, right, I will if there's a breakout already, I will look to buy on the pullback for price to go up. But if there isn't a chance of if like the breakout hasn't occurred yet, I'll look to buy on the break. That means when price closes, right? When price closes above the two levels, right? So price needs to close above the trend line, and price needs to close above the overlap over here for me to consider it as a buying opportunity, right? So I don't tend to use buy stops. I would wait for price to close, because for all you know, price might spike up and then go back down, right? And when that happens, you know, if you got in on a trade, you end up losing, right? You need the confirmation for this, right? Could there have been a HP move here? There could have been. There could have been a Harry Potter move over here. The profit target could have been over here. I wouldn't say a HP, right? But it's more of a Nike tick. So that's one way you can pick your take profits too. You can see the 127 happened very nicely here. This is the Nike tick I always talk about. Many different trading opportunities that you can look at. So even if you got the breakout, you took the breakout from this trade over here, right? And then you hit the first take profit. Once you hit the take profit, you know, if price comes back to 127, you can play the reversal from there, right? So there are many different ways you can trade the markets, right? So it's important to equip yourself with different ones, right? So it's like a toolbox, you know, you depending on the situation you face, you know, you need to take out different tools to trade. So sometimes, you know, you can play a breakout, sometimes you can play the reversal using the Nike tick, right? I think the Nike tick in this example would have 61.8 over there. Nope, not that nice. I don't think I can see a Harry Potter move over here. Not that nice. This one's purely the Nike tick itself, and it's a good enough trade. Okay, now let me touch on a few more things, right? So in this case, we're looking at pound dollar. Okay, so for pound dollar, it's slightly different. Right? We can see there's a fair bit of there's a channel over here. Channel 1, 2 touch, 3 touch over here, 4 touch over here. So 1, 2, 3, 4. Importantly, right, there's this Ichimoku cloud, right? There's an Ichimoku cloud that's pushing prices lower, as you can see. And equally importantly, I'm going to erase my drawings on this slide. Equally importantly is that price has bounced up once, bounced up twice, and looks like it's bouncing up a third time. So our idea here was that if price breaks below this level, then we can trigger a sell entry to go down to here. So importantly, it's not a sell stop, right? It rather is you need to wait for price to close below that level to trigger a move. Okay, so how it looked like since then? How it looks like since then is that GBP USD, I think, yeah. So you can see this was the move down that we were calling for price to drop, right? Same thing, you know, you got a bearish channel, right? You got one touch over here, two touch, three touch, four touch, right? But the bearish channel by itself, you know, is not good enough, right? I'm going to put and this is how you line things up, which I've been teaching you over the different levels, the different webinars, right? So you can see there's bearish momentum, right? There's a bearish breakout over here, right? There's bearish Ichimoku, all of it lining up for price to go drop very nicely, okay? And that is how you trade, right? If especially you want to trade this kind of breakouts, it helps when the market, when the momentum's in your favor. Remember, the probability of a breakout working largely depends on how strong is the momentum, right? You must think about that. I'm going to explain it again. The probability of rather success of the success rate of a breakout depends largely on how strong the momentum is going to be. Okay, so in this case, when there's a breakout that we see over here, there's a breakout that is aided by the bearish channel. It is aided by a bearish Ichimoku cloud, and that's why it has a nice little move in that direction, right? Ansu is asking, after breakout, does price have to retest the trend line, or can it shoot out down without testing the trend line? Ansu, in the best case scenario, price might retrace to test the trend line, but that doesn't happen all the time, right? So a good way is to scale into trade. So sometimes when price breakout, you get into the trade if it doesn't look like it's going to pull back, right? But if it pulls back, then you get in again, right? Maybe you put 50% of your position on the breakout, 50% of the position if you manage to retrace back, then you play the move all the way down. All right, in this example, I want to touch on a couple more things, right? So in this case, Ethereum, right? So Ethereum, you know, we're calling the move down here, right? Same thing. Let me show you. Same thing, Ethereum, right? There's a bearish channel breakout over here. Later, I'll be showing you bearish channel breakout, overlap level breakout, pullback, and it's a breakout of the Ichimoku cloud too, right? So we should be calling a move all the way down to here. And I believe, if I'm not wrong, it breaks the 23% retracement too. How does that look like on the charts? Okay, these are things that you need to train your eyes to be able to see, right? So if I was on Ethereum, right, you can see it over here. This was the move that we were calling, right? Price broke out of this overlap, right? It broke out of this channel, so there's that strongly bearish momentum. It broke out of the Ichimoku cloud over here, right? And if I'm not wrong, I think it broke out of a 23%. There you go, about there, 23%, right? A 23% retracement here, you know, broke it, right? Come back, and then it goes all the way down, which is what we're calling on Ethereum, you know, for price to retrace a bit and then come all the way down. Okay, last example I have for us, all right? Last example I have for us is crude oil too, right? So you notice crude oil, this is another example, right? This is what I love, right? This is called a double trend line confirmation. Okay, now this is how you can use trend lines to get a better increase the probability of your setups, right? First, you got one touch, two touch, three touch. So you know there is obviously a descending trend line over here. So you have a lot of bearish momentum pushing prices down over here. Okay, price is below the Ichimoku cloud, so you got two reasons why it's going to drop further. Price did break this overlap resistance, right, where price react off, bounce off, and it finally broke that level. On top of that, you know, there is this very, very nice one touch, two touch, three touch, right? One touch, two touch, three touch, breakout over here. So we got a trend line breakout. I'm going to erase, yeah, I'm going to trend line breakout. We got bearish trend line momentum. We got bearish Ichimoku momentum. We got overlap breakout, right? All of it lining up nicely to push prices down to the key take profit level, right? So this is how it looks like once again on the chart. Once again on the chart, you can see there we go, right? Price dropped very nicely from here. Our move, it dropped all the way to our take profit, right? And then it bounced up from there. So we could call the move, right? But if we had called the move further down, we wouldn't be in profit, right? But why did we call the level at 99.189 exactly, right? So you can see 99.31 was the level I was calling it to, right? So price would have we would have taken our profit there. Our profit target would have been hit. What I want to emphasize is it's very important to call the right take profit. You want to put your take profit before any key support. Remember, take profit is before, stop loss is beyond. Okay, so if I'm not wrong, I also took I could have taken a Fibonacci projection over here. So you can see a 61.8 Fibonacci projection, right? Starting point here, middle point here, ending point over here, right? Project downwards to over here. This 61.8 projection, right? And lines up with a key support level. And that is why I put the take profit level there, which helped me get off the trade before anything bad happens. Okay. Marugesh, Loom is just a video recording tool over here, right? This is Loom, right? So it's not a special trading room. It's just a video recording tool I use to trade. But if you want to join you want to join something, join the IC Markets VIP room where you can practice your analysis, practice your trendline breakouts, practice your channel breakouts, and practice your trades here a little bit more. So this will be the key thing I'm looking for. Example, on dollar yen, if price breaks this, I'm pretty confident it'll drop quite nicely. This recording, Sandeep, it will be uploaded onto IC Markets YouTube channel. Okay. Now, guys, I hope you found today's session useful, right? I hope you learned a lot from it, especially on the different examples I show you how you can use trend lines to trade. Use trend lines to trade, channels to trade, right? This is surgeon level trading. Yep. Oh, Joanna, I'm glad you found it useful. Oh, Julio, I'll take a look at it. Sometimes there's I know sometimes it's a little bit hard. Vandemir, what's the problem with the logging in? Let me know. You can ping me on Telegram too, right? If it helps. I'm glad you guys found it very useful. Utam, Ansu, Michelle, Gil, right? This is next level training, next level analysis, next level education, which you don't get out there, right? So I hope you found it useful. I really hope you found it useful. And once again, it's part of our session. If you found it useful, please help me rate it a 5 or 4, right? This feedback all goes back to IC Markets to let them know how we can better improve the webinars, right? But yeah, I've been with you guys for a better part for 1.5 years, right? I'm just doing my best to make sure that you guys have become better traders, okay? Right. So yeah, if there's any feedback, if you find that I'm going a little bit too fast, a little bit too slow, let me know. Right. If you want me to touch a little bit more on the basics, let me know too. Right. I'll do my best to kind of fine tune it here and there a bit to better cater to you guys. Right. Sandeep, I will do some live analysis on trades tomorrow in the live market analysis session. Okay, so tune in tomorrow, same time, same place, except it's on YouTube live, right? And I'll be able to jump onto the session with you guys to look at the markets in real time and practice some of the stuff we learned today, right? No worries there, Jen. I'm glad you found it useful, right? Okay, that is great. Mosiu, well, I guess I'll look at a trading psychology series sooner or later. All right. Thank you very much, guys. Right, we got 96% of you guys rating 4 and 5. Thank you very much. Kamsamida. Right. It's encouraging. These are the stuff that keeps me going. Right. So So thank you very much. Right. I look forward to seeing you guys tomorrow in the YouTube live session. So once again, if you don't have the link, right? If you don't have the link, I'm gonna send it one last time because a few of you guys are asking for the link, right? You guys want to go more in depth. All right, I'll do my best to make it more in depth, right? We're going deeper and deeper, of course, right? Let me go send it to you guys over here. Okay, Joanna, I'll try to do a session on trading psychology, right? Tomorrow might be my last session for at least the next 1 week because yeah, I'm gonna be a dad, so wish me luck there. I need more luck than anything else over there. Okay. Otherwise, thank you very much. Right. I'll see you guys when you see me next week. I'll when I'm back, I'll probably have massive eye bags. All right. Thank you very much, guys. Thank you. That's it for me. Stay safe. Trade safe. Yeah, thank you very much. Thank you, Ellen. Thank you, Desiree. Right. It's been a nice, yeah, you'll be, I mean, I'll show you guys my baby when when it comes. All right. Take care, guys. Stay safe, trade safe. Peace out. Catch you guys tomorrow. All right. For our last, for our last session of the week, live market analysis. Thank you, everyone. Yeah, sure. I hope I will be. Thank you, Syed. Adios, guys. Bye bye. Bye bye.